Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not investment advice. So this video is another trade school high frequency trading explanation and example video where I'm gonna explain why I took some trades and what's the reason behind this. Because when I'm doing those trades, I'm not able to do the explanation because I trade so fast, one trade after another, and it would be interrupting my trading flow. And that's the reason why I'm doing now this kind of videos, because I got a really good, nice resonance. Yes, I got a nice feedback from you all. You like those videos, yes, and so I will do some more of this to explain in detail why I took a trade, what are the basic concepts of those things which I have explained in the ebook. So wait. So get this ebook. It's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option, turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instruments. So get this ebook. It's for free. You'll find the link in the description. In the description, you'll find also the link to the Facebook group. Join the Facebook group, and all my trades are based on those concepts and those things which I have explained in detail in this deep explanation videos, yes, which are corresponding to the pages on this ebook. And not only this, there are also a lot of live trading videos which covers much more things in detail. So if you have studied the ebook, watch also all my live trading videos and the candlestick chart analysis video, yes, and the online trading videos to understand better how to trade, because the theory is one part, but the practice is obviously something else. And that's the reason why I have done so many live trading videos, to show you in detail what's going on and how to trade. So okay, that is this one. So get this ebook, don't miss it. And now I'm gonna discuss with you those kind of trades which I have done already, and I'm gonna explain you all those kind of details. This is the next video here, and you see we have here this kind of situation. We have here, that's what I have explained almost. You see here the 200, the 100, the 50, and the 20, and price is above all. What does this mean? Yes, right, we have here an uptrend. Yes, we are here in an uptrend. Then the second part is, what does it mean if price is in between of the 2 deviation Bollinger Band and the 1 deviation Bollinger Band? That means almost that we have an uptrend. Yes, and then what does it mean if the 20 SMA is or the middle Bollinger Band is crossing the 20 EMA, or you get a reversal like what is happening here? Yes, you see here it's crossed, and so we got a reversal, the trend change, the trader sentiment change, yes, and here it's crossed also, but this was not a changing in trend, it was a pullback. That is what I have explained in detail in the ebook, and I don't need to show you this again. You should almost know that those pages where I have discussed this topic. So okay, we have understood now that we have here an uptrend. So you can probably expect from me to do some calls here, yes. And so let's see what I have done. So you see, that are those stuff which I have explained here, yes. Let me see, that was this concept where I talked about the Bollinger Bands. Yes, here, look at this. We have here nothing else than that what I have explained in the Bollinger Bands. Here we get now breakout and expansion, yes, expansion, breakout. Now we can expect a higher volatility, yes, and that price will be in an oversold area. Yes, that is what's here up. And if we have a trend, we could do also some kind of pullbacks. That is what I have explained here. So then to the EMAs, we have to here, you see that part here expanding, EMA, the 20 EMA and the 20 SMA, yes, and more steeper the price is, more the probability that price will pull back from it. So that is what I have explained in those two videos about the moving average and the EMA. I have done a playlist for this, how to use the indicators, yes. So watch those 4 videos. It's all that are not a lot, yes, but they are really important to understand how to read the Bollinger Bands and the EMA. Okay, so let's see what will happen. I have explained those things in detail. You see, we got here a squeeze, and now we get a breakout. So, and we have here some kind of area. So let me do the first trade here. So let's see what happened. I'm preparing already, and I entered immediately into a call because I understood from the situation that that would be the margin of safety, yes. And you see also, like I'm doing here the mouse, I'm moving the mouse in this direction to explain in much more why I did this trade, and I will show you this also after this trade, how and why I did it, so you understand. You see, there was no price action on the left, yes. Only this little bit here on the left side, this one here on the left side, and here obviously a long time ago, yes. And that was also the reason. So, okay, let me see. I'm doing here some Fibonacci level now, but I will do I will pause it. So, okay, I place the Fibonacci level. But important here is I need to zoom a little bit out, so I let it run again a little bit. Let me see. Maybe I will do another trade immediately after this. So we have seen here, yes, let me show you this. We have seen here behind here, so here this is the area. We need to show you this area here. So let me explain this. So we got here a Bollinger squeeze, yes, and I have explained this already in the ebook, yes. And after this Bollinger squeeze, you can expect mostly a breakout. Here, the breakout was already started with this huge candle. This huge candle here crosses this area here, yes. This is a support resistance area, yes. This was the resistance area, yes. And because this area here was broken by this kind of candle so strong, and we got here this kind of alignment of EMAs and the crossing here, and that the 20 SMA and the 20 EMA are getting wider. I have explained this already. If we get those EMA wider, I have to repeat this again and again. So if you are getting these things wider, you have at this level here the maximum on the uptrend, yes. And after this, you see how they are getting again converging. That means the trend is stalling, and we got a reversal happening, yes. And that is what you can expect here. If they are getting wider uptrend, and after this uptrend, you get a downtrend. And that is only based on those things which you can see here on the 20 EMA and 20 SMA. That means if you see that the EMAs are getting closer together, you do here only any more puts, or you try to do trades at least from the highest entry point possible, yes, to do puts here. So, okay, so that was the first one. I have done this trade because this candle was a Marubozu candlestick. You see a really nice Marubozu candlestick because we have no wicks below, which shows that we have no selling pressure. We have no upper wick. That means also in this case no buying pressure, but we do not need no buying pressure because this candle alone is already a huge signal that price will go up further because it broke through this area here with determination, yes. And after it gone down, and that is what I have explained also in the last video, the price should go down, and after the rejection upwards, you enter into a trade. You enter not into a trade when the price is going up, then you don't enter and it going down, because that would mean you would enter here in the highest point and price would retrace, and that would be a reason why you get this out of the money on the running candle on the retracement of this running candle. Because if at the beginning the candle is moving upwards in an uptrend, you get the baddest, more baddest, or how it's called, the worst entry point possible, yes, and then price retrace and you get for sure out of the money. That is what a lot of traders does, yes. They expect this would be a rejection, yes, so they enter into the worst case scenario, and then they don't understand why it got out of the money, because they waited for the rejection. No, if you get something like this here, you understand, you should understand that the movement should be first of all to get down, to get a better entry point, and then on the last 30 seconds of the expiration time, price should go up. That is the right direction, and not vice versa, not up and then down, because that will fail. So that's the reason why so often trades gonna fail. So that is that what I have explained. That is an easy trade. Yes, it's an easy trade because you have here a lot of evidences that this trade would go would be in the money, because we have the EMAs which are showing you, and you have seen my last trades, and my last videos were almost those one where the trend was established. Yes, the trend was clear based on the EMAs that you see, which are heading in one direction. So let me continue. I don't know what, because I do not watch these videos again, so I don't know what's happening here, why it's lagging. I have to pause the video 1 second, because something is okay, something is lagging. I don't know. So 1 second. Oh, okay, that was this running candle, yes. So we wait till this will be in the money. I zoomed a little bit out. I showed you here, I was showing you this area here, yes. And then that got in the money, because like I have explained, we have a nice continuation pattern, this Moroboso candlestick. And then I draw some Fibonacci level, because I don't see any relation, yes, before. So, and that is also important. Wait, I have to do pause the video. So why I did pause the video? I paused this video to show you how to apply the Fibonacci level, because I got so often questions how to apply Fibonacci level. And you see, I'm doing the applying the Fibonacci level from swing high to swing low, or from swing low to swing high. It doesn't matter. But if you are getting the extension, this one here, the 161.8, you should apply it from swing high to swing low, yes. And then you have this kind of area here, which is the extension, and that is what I'm trying to get here. I want to know where this breakout will probably stop, and that's the reason why I applied the Fibonacci level. We have here also this kind of double bottom. Yes, you see we have here a double bottom with a consolidation area at this level here. It got first a retracement here, and after this it gone up. So the trade was here, yes. So let me do play again wait, let me put it at the point, because else we are going to lose a lot of time. So 1 second. So let me see if I can find the video. 1 second. Okay, so I will put the video on here. Okay, I have drawn the Fibonacci level here. You see from swing low to swing high to get the extension. Price breaks through this area here. Now we are above the 161.8 Fibonacci level. This candlestick got a rejection here from the 2 deviation Bollinger Band, so we are still into an uptrend. And let's see, I will do now play to understand what's going on. Is this? No. This is? Yes, okay, that was it. That was because I have here some problems with the Windows Explorer. So okay, let me see if I will do a pause if it's necessary. So I applied again. You see, okay, that I have to explain this in detail. So what I have done here. because I have explained this in the ebook. You see here the swing low, swing high to swing low, and then we have here the 261.8 Fibonacci level. Because I know that in between of those levels, also between the 61.8 Fibonacci level, we have this areas here. We have here another, so let me show you this. We have here in between, for example, here is also a Fibonacci level. Yes, this here in between is a Fibonacci level. So, and that's the reason why this kind of candle rejects from this, yes, because there is a Fibonacci level. And here in between, yes, is also a Fibonacci level. I don't know where it is exactly, and that's the reason why I'm doing a horizontal line here at this level, and then I turn this all around, and then I have here the 76.4, some of the Facebook group member 76.4 has mentioned this, yes. We have here this kind of 76.4% Fibonacci level, and that is the Fibonacci area, yes, which I try in this moment to spot while price is going up. So that is what I'm trying. That is in detail what was my intention by drawing now, and you will see this now. By drawing now a horizontal line, you see I put the horizontal line here, turned around the Fibonacci level, and then I get this kind of level, and you see we have here the 76.4. Yes, let me stop the video again. So look at this. 100, yes, 100 is all together. Here above we have the 200. Here above we have the 261.8 Fibonacci level, but the distance between this and this, yes, is 100. So we have here the 76.4 Fibonacci level, and this area here is also some kind of support level for this spinning top high wave candle, which is breaking this 23.6 Fibonacci level, which is nothing else than on the whole the 76.4. Yes, that is 76.4, and that's the reason why I have drawn this line to understand where would be the next stop if we are already above this level, above this support level, and then obviously price tries almost to hit against the 261, because that is not the 0%, that is the 261.8 Fibonacci level. Yes, that is a tricky part on it, and that is what I have tried to explain. So we got here this squeeze, we got this breakout, and this breakout will end mostly here above. You see here squeeze, a breakout, and also here look at how steep the EMAs are getting. Also the 200 EMA is showing here that we have a nice uptrend, because that movement is really huge. So okay, let me do a play again. I want to explain you only why I have drawn this horizontal line to have a reference point, to put the 100% Fibo level, to spot the 76.4 Fibonacci level, like my Facebook staff group member has mentioned it when I have done this in my ebook. So okay, let me see this. So we have this candle is forming, and we broke through the 23.6 Fibonacci level. Yes, we broke through this area. So, and it's broke through this really nice, yes. And then we have the next one, it goes down, and you see again, that's what I have explained before, yes. The movements are those. I'm not doing a put here because the candlestick is going down. I'm doing a call here in this kind, yes, because I know that this candle broke this 23.6 Fibonacci level. We have an uptrend. We have an uptrend. Yes, that is signed by the EMA, and also you should be blind to not see it. We have a double bottom. Yes, we have here an uptrend. We are still here above all kind of EMAs. We are here in between of the 1 deviation and the 2 deviation volume, and also above. That is not only an uptrend. We are here in an overbought area, and price can stay along in this overbought area. And you see also that we got here a rejection from this round number, which would say that also a round number like this 1.177, which is really a bad round number, but also this bad round number in a strong uptrend can act as a good support level. That is what I have when I explaining you to do call options on support level, yes, in an uptrend. In a strong uptrend, also the odd numbers can be a nice support level to get into a trade. So, okay, that was this one. And then you see also what is important, the movement. The movement is not above, yes, and then down, yes. The movement should be first down, yes, then you enter into a trade to get the best possible entry point, and after this it goes up in the last seconds of the expiration time. So let's see if this will happen here. To the context I didn't need to explain more because it's everything clear. We have a breakout, we have an uptrend, we have here the breakout of this area, which was the 38.2 Fibonacci level, yes, and so that is everything clear, and I don't need to discuss this further. So okay, let's see, I entered into this trade and in the expectation that price will try to get at least to the 261, which is here above. Yes, here above we have the 261.8 Fibonacci level. And I'm explaining the continuation of the trend trades, yes, because that is nothing else. We got here a call option on support level, on the support level of the 70. That is not the 23, that is the 76.4. You have to imagine that we have here above the 261.8 Fibonacci levels, and so that is, if this is the 100, we have here the 76.4 levels. So, and you see that gone also in the money, and because price tried to get to this 261.8 Fibonacci levels. So, okay, that was this one. And let me spot, and you see now it's going here a little bit tricky, because mostly after such okay, I entered again into a trade. And why I did this? Because I was still aware, because price didn't touch this level here, yes, this kind of 261.8 Fibonacci level, and as long price didn't touch this, and we are already close to this, I was expecting that the 261.8 Fibonacci level acts like the EMA, the 200 EMA, the 100 EMA, and so on, which are like magnets. They are pulling price to them in this direction, yes, and also because this candle was a strong bullish one, which shows that there is still buying pressure, and you see it's gone up, but the entry point in this case saved me here. If I would enter immediately, it would be out of the money. So okay, that was this one. Let me spot the next trade. Yes, here that is a little bit tricky. Yes, because this could be now also a sign of reversal. Yes. But it could be also a sign of a continuation. So I probably don't have done the trade here, because this is tricky here, yes, because I was expecting here that price would go against the 261.8 Fibonacci level. It has done this. It created this kind of dragonfly doji, yes, and that is that means here we have a strong resistance area, yes, and that is a tricky, and so I would not enter into this kind of trade here and a trade without any kind of evidences. So let me see if I can show you the next trade. That was maybe a little bit later. So 1 second. Okay, that were already all the trades I have done here. So you see we have here this kind of thing, and after this I didn't have done any trade, and you see also how tricky this part was, and like you see, it starts now to do some kind of tricky market, yes, and that was the reason why I didn't have done any trade, because I was expecting that this candle would touch the 261.8 Fibonacci level. It doesn't happen, yes, and after this it starts here to get in some kind of consolidation area, but the uptrend was too strong. We are here in no man's land, yes, that is what I'm explaining. We have here, somebody asked me about this, what is no man's land, yes, what does no man's land mean, and I will explain this again. So no man's land is area here, this area here, I will show you, this area is no man's land. In between here, in between, that is no man's land. In between here, it's no man's land, yes. In between here, it's no man's land, because in this kind of area, you have no Fibonacci level, you have no support and resistance area, yes, almost, and that means we have here no man's land. Price can go in every kind of direction, yes. That is also the case if you have strong support and resistance areas, and in between is nothing. That means we have no man's land where price didn't know where to go. It can go up, and that is what the arrows are showing. It can go up and down in any case, and overall in between. You have to understand that we are here in between the 261.8 Fibonacci level, yes, and I think that was here something like the 100, or here was the 100, the 161.8, and so we are here in between, and that is almost area where price didn't know where to go. It's so its price would be in between two strong EMAs, like the 100 and the 200, the 50 or the 100, or the 200 and the 50. Then price starts to consolidate, get in consolidation area. Yes, it's got stuck, and that is what you try to have to avoid, and that is here the reason too. I avoid this kind of trade here because I understood that we are here in no man's land, and it would take a few minutes to get out of it. So let's see, and that was already everything. I have then explained some things, but I didn't have done any trade because I know that this would be risky. But at the end, you see also that could be also in the money if you have done this, what I have told you before, that you have used this kind of area here as a strong resistance area, and then you could have done a put. But you see the candlestick already, they are so tiny that you could enter here also in a bad trade, in a bad entry point, because the previous one was already risky. It was a close one, and I do this in this case. If I get a close in the money, I try to get on the next trade a better one, yes, and better and nicer candles, and not so tiny candles which are really risky, because a strong movement in one direction will put you in the bad situation. Okay, I think that was enough. I have explained everything what I tried to explain in this trade video, yes, where I have explained. Important here to recover is the Bollinger Band, the squeeze, yes, the uptrend, the EMAs, how they are aligned, the candlestick pattern, and how to draw the Fibonacci level, and how you understand if support and resistance level will be broken or not, depending on the candle size, on the wicks of the previous candle. If this is a strong candle, it is most probably that it will break. And here it broke this area because we have here already another tentative here of this area, and obviously price action on the left, not so far away. Yes, that is the reason why we got through this, and later price would come back to this level maybe, yes, and if price would get to this level and we are still into this formation of EMAs, you could do a pullback, an uptrend, yes, a pullback trade, call trades on the pullback. Okay, that was this one. If you like this video, do a like. If you didn't subscribe, subscribe to my channel, and if you have something to say, drop me a line in the comment section. And so I would say, stay safe and bye bye.